Hi, my name's Joshua Mahony, Chief Market Analyst at Scope Markets. Let's look ahead to some of the big names that will be reporting in the second week of Q1 earnings season in the US. I've already provided an outlook for the entire earnings season, so from a big picture view. So make sure to check out that video as well. I've also within that previewed a few of the big banks that we're going to see reporting in the first week. So I wanted to look aside from the big banks and the banking sector, because I think a lot of that volatility that we've already seen by that point will minimize the volatility we're likely to see off the back of those numbers seen in the second week. Instead, I wanted to point towards some of the big names that we see from other segments of the US economy. We're going to kick off with Netflix. Now, Netflix report on Thursday, the 18th of April. And the key thing here is that we're expecting to see a massive bump in terms of the earnings per share figure. You can see here 451 expected. Last time we saw 288 for Q1 of 2023, 353 for 2022 Q1 figure. So this is looking to shape up for a particularly strong start to the year. And potentially this is going to be something that maybe the bar's been set too high. It's going to be difficult for them to reach that. And we see underperformance off the back of that. Or maybe this is a big number that markets essentially say, look, they're powering onwards and upwards. And you can see the following quarters are also expected to be big, in particular Q2 and Q3. So certainly markets are expecting to see a big ramp up in profitability here for Netflix. And in terms of the revenues, also expected to increase above that 9 billion mark and looking to stay there with a 10 billion number for the fourth quarter. But certainly there is an expectation that the company will continue to move onwards and upwards and go from strength to strength. In terms of the share price, we can see here, well, it's been doing exactly that. You can see the pullback coming into play recently really comes in line with a wider market sentiment sort of question marks coming into play. This is a daily time frame. So essentially, we're seeing the lows here in October of 2023 and gaining ground since then. So if I look on the weekly time frame, where do we stand? Well, we're trying to climb back up to those prior all-time highs, which are around about the $7 mark. And we're around about sort of 618 at the moment. I don't necessarily currently see anything that tells me we're going to see a big reversal, because we haven't broken out from this trend of higher highs and higher lows, with the near-term swing low of 601 coming into play. So a breakdown through 601 trendline support would point towards a wider pullback coming into play. But until then, the bulls are in charge. And if their estimates are anything to go by, we could see Netflix really start to ramp up their profitability as they move forward through 2024. So keep an eye out for this as one of the first names really from the tech sector. Next, I wanted to bring up American Express. Amex essentially is a play both on spending habits over in the US, but also on travel habits. And certainly both have been improving. So there's grounds for optimism for Amex shareholders. In terms of the expectations, 296. Last time around, we saw 240. Prior to that, 273. These are Q1 figures for the earnings per share. And then in terms of revenues, 1579. That's a touch below the Q4 figure that we did see. But in terms of a comparative from the same time the prior year, it was 1428 and then 1174. So building on a year-on-year basis, but somewhat gradual. Really, the question mark here is whether they're going to outperform on this number, because things are relatively sort of choppy when it comes to market expectations and whether they manage to beat it. Some companies really sort of massage the numbers in a direction where they're able to beat it, and it really does benefit the stock around the report. But you can see here, this is not one of those companies. You can see in terms of revenues at the bottom, every other year they sort of underperform. And I would say it's not necessarily much better in terms of earnings per share. Out of the last five, they've significantly underperformed, or on two of those occasions, significantly underperformed market expectations. So there's question marks around this one. And we have seen some selling pressure coming into this announcement. Let me just bring up the chart. Certainly, as you can see here, the American Express share price has recently dropped back below this 217 support level. If I highlight it on the daily time frame, you can see that we've just seen this tentative move below that level. And the question mark is whether that really is indicative of a wider pullback coming into play for American Express. In the lead up to this announcement, certainly there appears to be some risk off sentiment, but that is going to be something that we're seeing across the board for a number of these names, because markets as a whole are really struggling with the higher inflation gauge from the US, and question marks around about the timing and the speed of those Federal Reserve rate cuts. So is this just a wider sort of market picture that's driving this sell-off that we're seeing at the moment? Big questions, but certainly the US consumer has remained strong, and there is an expectation it will continue to do so. It's just that we won't necessarily see the Federal Reserve, or I don't believe we'll see the Federal Reserve come to the rescue to boost the economy as quickly as people might hope, because inflation in the US might take a little bit longer to drive down. That comes in part because of the strength of the US consumer. But we've tipped below that 217 mark. That could lead to further short-term downside. But certainly if you look at the weekly time frame, you can see that this has been a big outperformer for a while. So I wouldn't be surprised if any sort of near-term pullback soon enough gets brought up for this stock. But like I said, it has been somewhat changeable when it comes to their performance against market expectations. And it's worth looking out for this stock. This is reporting on Friday the 19th. The final stock I wanted to highlight here is Procter Gamble, consumer staples powerhouse. The big question mark here is, do they manage to drive up their margins in the face of higher inflationary pressures? That really puts pressure on their costs, but it also allows companies to be able to drive up their pricing. And certainly that is most notable within the likes of consumer staples, because these are the kind of things that people feel they have to buy. They don't necessarily have question marks. And you can see here on the earnings per share, outperforming market expectations on the last 6 occasions. So 6 quarters in a row they've beat on earnings per share. Bear in mind, it's also going to come down to their expectations going forward. But as I highlighted in my sort of wider video about earnings season coming up, it's notable that the expectation is that as we move throughout this year, the growth is going to be less focused on tech and more so on the rest of the economy. And certainly that is highlighted here with the expectation here that we're going to see some strong quarters ahead, with hopefully some strong year-on-year growth for this company. But certainly margins are going to be absolutely key as we move forward. Procter & Gamble, in terms of their share price, we can see here that we've seen a bit of a pullback in line with market sort of performance recently. But by and large, if you look at the long-term trend, this is a very nice trend that we've got playing out here. So a reliable performer, and certainly it has been the kind of stock that people have generally bought up on pullbacks. You can see here we get pretty decent swings here, but each time we generally do see this bought up and we push higher. Well, we've pushed out of this consolidation phase, and now we're pulling back. Whether we see a more protracted pullback or not remains to be seen. But certainly from a sort of investment sort of shareholding standpoint, I'd be looking at this 140, 160 as the backstop. As long as we're above that, this pullback looks like a short-term retracement phase before we see the bulls come back into play. In terms of short-term trading perspective, where you can see we've broken out from this shorter-term, ascending trend that we've got here. Some of those are not placed correctly. So these swing lows, you can see that we've seen a breakdown through this 157, and that's now being respected as newfound resistance. So we could see some weakness coming into this, but that's going to likely come in line with market performance. And really, you're looking at a stock that, even if we do see a pullback driven primarily by what's happening elsewhere, I think people have in the past seen that as buying opportunities. You look back at the performance of this stock when it comes to prior occasions, and they generally beat market expectations. Whether that's just a case of them managing to sort of keep market expectations, keep a lid on them, and then outperform, that remains to be seen. But certainly I would say that this differs from the likes of Netflix, where we've got massive expectations. It may be difficult for them to reach a P&G. It seems like they do quite well in terms of keeping a lid on expectations, and ultimately that should pay off when it comes to earnings, because it sets the bar lower for them to outperform, which is what they have done for the past 6 quarters when it comes to their earnings per share.